Friday, December 29th, 2023, Maneco 64, home of alternative economics and contrarian views. So today, we're going to look at whether the BTFP is pointing to another banking crisis in 2024. If you don't know what BTFP is, bear with me because first I want to make a few announcements. You probably have seen that I haven't made as many videos in the last week or so. And that's because we went to Switzerland to spend Christmas there with the family. We had a really great time. You probably saw I did make a video or two from there, and I also did an interview with Rafi Faber a couple of days ago from Switzerland. And yeah, Rudy didn't go with us, but he's safe and sound. I'm gonna go pick him up after I finish here this morning, so he should be back on the saddle very soon. The other thing I wanted to say is that after another year of doing what I do here on the channel, I'd like to thank all of you again for your interest and support of the channel, and that hopefully I'll be able to keep providing good content in 2024 for all of you, and hopefully for new subscribers as well. Back to BTFP then. And some of you, as I said earlier, might be asking, what is BTFP? Well, it's a program, one of these programs, which is basically money printing. Whenever the Fed institutes a new program, you can bet it's money printing. And they instituted last March when we had the, this March 2023, beginning of March, when SVB collapsed and a lot of other banks, regional banks were in trouble, had to be bailed out, the depositors. And it's called, really, the official name is Liquidity and Credit Facilities Loans Bank Term Funding Program, BTFP. So basically the banks went under in March this year because the investments they made in U.S. Treasuries were underwater, and depositors got a little bit worried and asked for their money. And their investments in Treasuries had gone, in some instances, down by 50%, especially the long-term Treasuries, which are a lot more sensitive to rising yields. So what the Fed did is they said to a lot of the banks that were going to get in trouble after SVB, First Republic, well, you can borrow money from us, and you can bring in, let's say, an investment or a treasury security that is worth 50 cents. We'll pay you 100 for it, but you have to borrow, and then, you know, you can pay out your depositors if they want their money. Or you can lend further. And that's the other thing as well. With the fractional reserve, I bet a lot of these banks have taken this loan from the Fed, artificially inflated loan, and lent out many times over. So I would say the increase in BTFP, and as you can see here, I've got the chart for it, is probably even more than what they tell us here. But what seems to be worrying to me is that since the beginning of November, when it was at 109 billion, it's grown to 135, almost 136 billion. So almost 30 billion increase. And in the same period, I think the Fed's balance sheet has gone down about 150 billion. But if you legislate for a fractional reserve, you could argue that this liquidity injection by the Fed through BTFP is actually completely neutralized the sell-off of the Fed's balance sheet through QT. And maybe that's why in the last couple of months, the stock market has been goosed up. And Gold has gone up, made new highs, because the Fed knows there's trouble ahead. And I think the US Treasury market as well, through all the falling yields that we've seen, is pointing to trouble ahead. And it's interesting, though, that the dollar looks really weak. And usually when there's trouble in the system, the dollar goes up. So not a good cocktail here. And what should one do in this instance? Well, personally, I'm not exposed to the stock market that much. And you might ask, why don't you like to invest? Well, I think people should stick to investing in what they know, and maybe even investing in themselves and their own business or their own family. And that's how I see it. So I'm not too concerned about the stock market, even though I think a lot of people are calling for a major correction. That could be right. Would I go into the stock market if there's a major correction and buy some securities? Maybe in the sectors that I think are still going to be relatively more positive, that have underperformed massively the major, the general stock market, and that is commodities, as I've said many times, and also the miners in gold and silver and even some other metals. So I still favor commodities and hard assets over paper assets, and I think that trend is going to continue. It was a good year for commodities in 2022, not so much in 2023. But I think there's so much money out there in the overall market that if there's trouble, even if a little bit of it flows into hard assets, it's going to make a huge difference. So that's how I see it. And what could it be pointing to? Well, more trouble in the banking sector. And we need to keep an eye on this BTFP. I think the previous number from last week was 130. Let's see. You can see it was 131 billion. So it's increased by about 4.5 billion. It doesn't sound much, but as I said, they can hypothecate that or do fractional reserve lending off the back of those loans from the Fed. So let's quickly look at the markets then. Today, of course, is the last trading day of the year. It's the last trading day of the week. It's the last trading day of the month and the last trading day of the quarter. So it's an interesting day. But of course, it's still early. It's 8:06 a.m. London time. So we've got spot gold at 2,072. It's up about $6. The high's been 75 and the low 64. So yes, we had a high recently above 2,100. But I think if we can close above 2070, which previously was like a triple top going back to 2020, that's very bullish, I think, for gold and bearish for the dollar. And the dollar looks really, especially against the Swiss franc, which is where I was for a week, the dollar looks very weak, as you can see by this chart. And what do I think is going to happen to the Swiss franc? I think the Swiss National Bank might have to cut rates in 2024. They've raised it from minus 0.5% to 1.75. And Switzerland depends a lot on tourism. And the way the dollar is going down here against the Swiss franc, I'd expect them to cut rates maybe in spring, or maybe start doing QE and buying NASDAQ stocks like the Swiss National Bank has been doing. So, yeah, that's how I see things. And if you look at this long-term chart, logarithmic chart of gold going back to the 70s, you can see that there's a lot of room percentage-wise to the upside. in the price of gold. 2,500 might seem a lot, but on a percentage term, in a percentage term, it doesn't. That's why it's interesting to look at the logarithmic chart. What about silver? Well, silver been struggling the last day or two, and this morning as well. It's down 18 cents at 23.80, right near the lows. A high's been 24.03. To the stock market indices, the Dow future is up 49 points. The Nasdaq is up 21, S&P up 5. To the currencies, sterling is up about 0.2 at 127.50. The euro is up a tenth, just above 110 at 110.72. And the dollar is unchanged versus the yen at 141.39. The dollar versus the Swiss franc is down 0.5% at 84 centimes. And I remember back in the 70s, you could fetch over 3 francs for $1, and now you can only fetch 84 centimes. And when I left Switzerland in 1992, I think it was around 160. I made a video the other day talking about how the Swiss franc, and I guess I would add the Singapore dollar, are the best shirts in a pile of dirty laundry. They are the best performing fiat currencies. So if it floats your boat to have some fiat currency, I would recommend the Swiss franc. What about the yuan? Well, the dollar is down 1/3% versus the yuan at 7.0970. Let's check out the other currencies. The Aussie dollar is up slightly at 68.32. Pretty strong though, compared to the last few months, I would say. The dollar is unchanged versus the Canadian dollar, 132.38. And the Kiwi dollar is approaching 63.50. It's up about 0.5%. To the commodities, WTI crude is up 0.5%, 72.13. Brent is up 2/3%, 77.61. Platinum is trading just above $1,000. It's pretty much unchanged. High-grade copper up slightly at 3.93. And we'll finish off with the U.S. Treasuries and the Treasury yields. I saw that they spiked up a little bit yesterday. There was a 7-year auction that didn't go that well. Right now, the 10-year yield is unchanged at 3.85. So with that, I'm going to wish you all a very good day. And we might actually be doing the Mike and Mario show today. I'm not sure. If not, I'm going to have to wish you a Happy New Year, even though I might publish something tomorrow. Sunday I do my live stream usually, but we're going, a friend of ours invited us to a New Year's party, so I won't be able to be doing the live stream on Sunday. So yeah, happy New Year, and a prosperous one as well, hopefully. Take care. Bye.